What happened in the market through the second quarter? I'll break it down next. You're definitely going to want to watch this one. Here is your second quarter 2023 housing market update for Philadelphia, Chester, Delaware, and Montgomery counties. We've got the whole metro area covered. I'll break down the stats. I'm going to put them in ranges, and I'll tell you what it means as we look into the second half of the year. So first and foremost, number of sales are down 20.8 to 29.6%. So there's obviously a lot less homes selling so far this year. No question about it. Average price point in the suburban counties, Chester, Delaware, and Montgomery, is up 5 to 6% from the second quarter last year to the second quarter this year. So the same sample size year to date, and it's down 1.8% in the city of Philadelphia. Days on market is ranging 21 to 24 days, and that's seen a big increase in the suburban counties. That's just the suburban counties, anywhere from 6 to 40.2% more than what it was taking for homes to sell last year. And we're still talking 3 to 3.5 weeks, which is mind-blowing. And in the city of Philadelphia, we're seeing an average of 60 days, which is up 54.9% compared to the first and second quarters of 2022. Supply, we're ranging a 1.1 to a 1.3 month supply right now. That's up substantially from where we were this time last year because there's less homes selling, the absorption is lower, so homes are sitting on the market a little longer, as evidenced by days on market and the trends there through the second quarter. And the number of new listings that came to the market are down 38 to 50% in the suburban counties and 34.6% in the city of Philadelphia. Rates, we know they're hovering around 7% right now. We've had a lot of stability. It's going to be very interesting to see what the Fed does with their meeting looming large at the end of the month. So a lot of numbers, a lot of stats. If you're a seller and a buyer, or you're thinking about transacting, what's going to be really critical here is determining how these statistics and how these trends are going to affect you. So if I'm a seller right now, what I'm looking at is that we're seeing interest rate stability, and a lot of predictions are that rates will be coming down. What I also see happening is price growth slowing. There's no shot prices are going down when inventory is where it is. We're also seeing days on market start to rise, and there's less homes on the market. So if I'm a seller and I know where I'm going, I'm looking at this as the market might be moving away from me, unlike what happened a year or two ago where the market was moving towards sellers. And when you start to see the early signs of the market moving away and you're thinking about making a real estate transaction and selling your property, I'd want to be ahead of all the sellers that are going to be late to the party, because typically the sellers are the last one to realize the market shifted away from them, and you don't want to be in that position when you're selling one of your largest assets. All the more reason to have a no commitment strategy session with a local agent who can tell you exactly what's going on in your neighborhood, in your town, for homes that are priced and sized just like yours. So I see some opportunity for sellers right now. We're not seeing 10 or 12 offers anymore. We're seeing sometimes 1, sometimes 2, sometimes 3 or 4. So demand, while is very, very healthy, it's not that ferocious demand that we saw with 10, 15, 20 offers. A lot of people said prices were going to come down. Other experts said prices will continue to go up. There's no sign that will happen because of supply and demand, which we talked about a lot on the show here. So if I'm a buyer looking at this, and there's news of rates may come down later in the year, I've got some hard news for the buyers that are watching. Timing the market doesn't work. I've never seen anyone time the market and have it work out for them effectively. So if I see prices continuing to appreciate, and I'm in a rental situation, or even if I want to move up, or even if you want to move down, really, as prices continue to appreciate, you want to get into the property sooner so you can take advantage of that appreciation for yourself. You can build that equity on your own, and then if rates do come down somewhere later, you have the ability to refinance. It's not a guarantee, it's just how markets work. The flip side of this is, if you don't have a place to go and you're not clear on where you want to go to, you might want to sit down and meet with a professional to understand what the market outlook is for the next 12, 24 months so that you can best determine your next steps in action in making a move. It's all about getting information right now. And there are signs that if you're in a rental, you want to take advantage of appreciation, buying sooner than later would be the right move for you. The same thing with sellers. If you've already got your next home lined up, or you know where you're going, whether it's a rental, you're moving out of state, you already own the property, whatever, or you're willing even to move in with some family members and take advantage of selling so you can go buy because maybe you need to sell to buy, I'd be looking at all options to sell your home now versus waiting, because when rates come down, because they will come down, what goes up must come down. When rates come down, there's going to be a lot more inventory hitting the market. And when rates come down from a buyer's perspective, there's going to be a lot more buyers entering the market. So if you're brave and you understand the market enough to transact and capitalize now, you could do a lot better than waiting to time things out. Obviously, when you have questions, you want to get a local expert opinion. We're here to help. We know how to assist. No commitment involved. Just reach out. We can put together a strategy session for you so you have all the information relative to your home and your situation, because that's what matters most.